Well, the inauguration's over. All the political battles are ready to start. There was some good news today that perhaps the debt ceiling will be kicked down the road for 3 months and not be an issue in February as we feared. But it is earnings season, and therefore we're going to have volatility due to the various political battles and the various announcements as they come out. Now, today was one of the first big days, and it's mostly favorable. Google beat everything, beat sales up 36%, beat revenues, beat earnings, and is up 5% in the aftermarket. We can tell how well they did by how far they're up in the aftermarket. So they're up 5%, they liked it. AMD did well, not as well as Google by any means, but they're up 2.5% in the aftermarket and everything looking okay there. They made a loss, but a lot smaller loss than people would have expected. Texas Instruments did fine in the fourth quarter, but they projected ahead. Their guidance for the first quarter was weak, and they're down 0.5% in the aftermarket. Other winners were Wells Fargo that increased their dividend by quite a bit. Delta Airlines, better than expected, up 3% during the day. Freeport-McMoRan and DuPont both bested. Virtually everybody all day long improved on the bottom line and most improved on the top line, which is a very nice surprise. It's only one day. It's only one day, and usually the leaders, the first ones out, are the best, but we'll see. The only economic data we had today that was of any significance was existing home sales, and it was a little bit weaker than we expected, but not enough to get excited about. What worked last week? Mid-cap value was the best. Everybody, all style caps made money, but the best was mid-cap value. If you look at our last 6 different time periods over the last year, it's either small cap value, or mid-cap value wins 5 of the 6 times. Large cap growth was the worst, but still positive. So, given all of that, looking ahead, our sectors, we favor healthcare, we continue to favor financial and telecom. Last week, the 2 consumer cyclicals and non-cyclicals, along with industrials and energy, did the best. On the worst side, looking ahead, is industrial, non-cyclicals, and utility, with last week, technology is doing poor, led by a very weak performance by Apple, and it's the giant in the room, elephant in the room, and it didn't do well, so it was not a good week for technology. Telecom did not do well. We've got 3 stock picks for you to think about in this environment. In the airways, it's RJet, Republic Airways. It's a small cap. Almost all the analysts that cover the firm have raised their estimates recently in the last 30 days. 200 projected EPS growth next quarter. A PPE, forward PE of 5, and a growth rate over the next 5 years of 40%. Sounds good, right? Calumet, which is a partnership in the energy industry, pays an 8% dividend. Mark that one down. 8% dividend, trading at less than 10 times earnings. Projected growth rate for this year we're in now, over 250%, but everybody knows that because the year's over. And 213 is at a much smaller rate, but still the 8% dividend plus any growth is going to be pretty good for a company this cheap. Finally, in the healthcare sector, we'll give you Salix Pharmaceuticals. They make a lot of GI products. The analysts have been upgrading them consistently for the last month, and they have a 20% 5-year growth rate. That's what the market wants.